Good day and welcome to Window, your favorite podcast in development, agriculture, investment, and business issues. I am Arrey Ivo. In today's program, we shall be focusing on non-oil investment opportunities in Africa and how they can be transformational and encouraging. It must be noted that from 2015 right up to 2017, there has been a fall in commodity prices globally. And many African countries, including giants like Nigeria, Cameroon, and a host of North African countries, including Algeria, and to the east you can pick up countries like Angola, have all been affected by the fall in the commodity prices, which Africa is a major exporter in many sectors, including not only oil, but diamond and coltan and cobalt and aluminum. This has led to a somewhat reduction in the growth forecast of the continent, as intimated by international institutions like the IMF and the World Bank, and other regional institutions, including the African Development Bank. With this, it has also opened up a window for possible foreign direct investments in non-oil or mineral sectors in Africa, as governments have been creating an enabling environment for alternative investments in other sectors. One such area that we will be touching within this program is agriculture. You all know agriculture has a lot of potentials, as Africa has more than 60% of the world's remaining arable land. Africa has got a blossoming population of about 1.2 billion people who need to be fed. And Africa has got a very thriving population of youths between the ages of 19 to 25 that can be leveraged and used in the agricultural sector. Now, as the enabling environment for agriculture is improving, it is clear that financing for agriculture is also increasing in the African continent. It is coming from a couple of different investors. Internally, from African investors and venture capitalists who understand the dynamics of the African economy and do not look at it as a risk-based economy, as well as risk takers who are also facing a fall in global aggregate demand in many other value chains and are now looking at Africa as a continent that is improving both structurally and politically, as that offers cheap and available resources that can be used both for agriculture as well as in other sectors. Now, agriculture is really very interesting because Africans really are in the state that financing is going to help. Africa has a low yield per hectare when compared to other parts of the world. Africa has got a low gross margin per hectare as compared to other parts of the world. Africa has got a variety of crops that are consumed locally and that have ready markets locally, even if they could be consumed globally, especially as the African diaspora is expanding. So, leveraging in agriculture will mean private partnerships between investors and entrepreneurs and landowners, and that is increasingly happening across the continent. There are some movements from South Africa to places like West Africa to leverage on ECOWAS and giants like Nigeria and Ghana. And there are also movements towards Cameroon in the CEMAC region of the Central African region. And there has been some activities around Kenya and Uganda that are worthy of this program. Now we shall be moving on to renewable energy that also has a lot of potentials. And you know, Africa is very sunny, and therefore there are a lot of opportunities with wind and solar and geothermal energy generation. Solar is really very interesting, and all these energy sectors, as the continent still has 600 million people who do not have access to basic electricity. And this calls for strategizing on the best development and business models to be able to impact in the continent. And while working with governments is important, it looks like it probably needs working with those that have situational intelligence in this light to know how to invest, where to invest, and how to cut short the bureaucracies or the risk factors that are perceived from out of the continent. There is also the issue of large-scale investments in our infrastructure and the sectors of health, the sectors of growth in road networks, the sector of air transport systems are also very encouraging, and logistical development is also taking place across the continent. In the Congo, there is the construction of a dynamic port, which is going to be a major hub of transportation in the Central African region. And we are seeing that these things are happening across Africa. Railway construction is taking place in many countries in East Africa, in Ethiopia, in Kenya, and so the movement or intertrade between African countries is seemingly increasing. And we are also facing the need for investments in the tech sector, and this offers a lot of opportunities for startups and for financing. And recently, there has been the mention of a tech incubation lab in Mbongaya in Cameroon, which offers a major opportunity for tech industry experts and investors from areas like the Silicon Valley to be able to invest in places like Cameroon in the tech sector and to leverage from her growing tech sector. But then there are some limitations as to these positive aspects of growth and development in Africa. There are financing gaps in billions of dollars, and there is the lack of sometimes political will in certain areas of the country. And there is also what some people have described as donor or investor ignorance. And this has actually reduced the rate at which there is growth from certain segments of the investment community. And China seems to be leveraging on these, many say, because it does not question a lot of the political systems that are in place in Africa, but also because it is having situational intelligence by working with locals in the establishment of ventures. And in this space, there must be a win-win situation where financing and situational intelligence seem to be placed on an important scale, but that is where entrepreneurs can be co-opted into the design and implementation of projects. And there's also the dependence on business plans rather than situational intelligence that affects the rapid engagement of investors into the continent. And this calls for more better understanding of Africa, more important reflection and synergies between investors and entrepreneurs, as well as understanding data generated from civil society organizations that can be relevant in understanding the tempo of development across the continent. Now, ladies and gentlemen, you have been listening to Window from the African Center for Community and Development, and in today's program, we touched the opportunities of the non-oil sector in Africa, and we touched aspects of agriculture, renewable energy, and tech, as well as financial gaps in all these sectors that are also affecting the continent. Thank you very much for tuning in. It has been Arrey Ivo.